these are all backward-looking numbers, so we know what we think happened in July with sales. And, consumers are doing a lot of different things. They're paying rent, they're paying off debt, they're saving. We know that the bonus unemployment payment, that $600 a month from the federal government, was coming to an end. People knew that and were certainly aware that that might happen. So I think the question will be, as we go forward, what happens? Consumers have been very strong. They've been very resilient throughout the pandemic. We've seen them come back with the right kind of support. And so, kind of picking up on what Leader McCarthy talked about in the earlier segment, I think our view is we should be focusing on the things that help keep the economy open, support businesses, strengthen consumer behavior, and let's keep working our way out of this little by little.
Mickey, what are you seeing in terms of the credit quality of retailers' issuance? I mean, are you seeing more and more come under more stress? It does seem like the retail sector is a sector of haves and have-nots, where you have the likes of a Target and a Walmart that are doing so well, throw in Amazon if you want in there, and then you have a whole host of others that are just struggling in this pandemic.
Well, first of all, I think the numbers that came out today are actually pretty good, all things being considered, after a great May and then a follow-up in June. So the consumer seems to be resilient, but the August numbers are definitely a question mark. The stimulus numbers, that the stimulus programs that the Fed had have expired. And so I think that unemployment is still high, consumers still stressed. But if you look at the categories that, that the sales are really coming from, it's categories that you would expect when people are at home and, not going to restaurants, they're not taking vacations. They're, sporting goods, it's building materials, furniture, appliances, and basically non-discretionary food. And so these are big categories of sales. So, we're not that concerned on the sales number going forward. We still think that you're going to come up with either, a low single-digit sales increase for the year. But what we're more concerned about is what profitability these sales are generating for retailers. So you've got a couple of things going on. Most of the sales mix, and even on these sales, right, is basically a lower margin consumable sales that is impacting profitability. E-commerce sales are really off, really skyrocketing. We expect a 25% increase in e-commerce. These are lower margin sales because there's fulfillment costs, delivery costs, customer acquisition costs, and then retailers are spending a lot of money on safety equipment, more bonuses for the employees, for hazard pay, et cetera. So we're expecting a 25 to 30% drop in operating profit across retail for 2020. And those numbers are not going to come back to 2019 numbers until the earliest 2022. So the default rate for non-investment grade retailers is going to skyrocket and peak sometime in December to levels that is higher than 2008, which was the peak of the financial crisis. So overall, we're negative on retail, not primarily because of sales, but it's basically a profitability issue for us.
So we're going to see a wave of bankruptcies even before the holiday shopping season is finished.
Well, we've had a number of bankruptcies. Yeah, and I think that you're going to see more. And
but you mentioned the peak.
Yes. The peak is definitely coming on a default rate basis. So when we look at defaults, we look at defaults not only in bankruptcies, but we look at defaults where there are distressed exchanges, where there are exchanges for bonds, for equity, and those kinds of issues we look at as a default because it's actually not fulfilling the promise of payment. So we include that in our default rate, when we calculate it. But yes, it's still going to continue and peak in December as far as the default rate goes.